Hi, I'm Chris Hempstead. Welcome to On the Vine podcast. I am the managing director of equity and portfolio trading here at Mirae Asset Securities. We're an authorized participant for ETFs. We involve ourselves heavily in creating and redeeming ETFs and soon to be market making. So more on that later. What I'd like to do is kick off this episode with our first 6-month highlights of 2023 in the ETF space using some data that we collect from our friends over at ETF Action. We were observing the top inflows of ETFs this year. Where is that? Where are we seeing big inflows? Multi-factor ETFs, quality equity ETFs, $40 billion of inflows across those two categories. Really impressive. So we're going to continue to keep an eye on that space and figure out, if that's a sustainable amount of inflows. But certainly, a big round of applause to all the managers out there who've been successful in distribution. I'll talk a little bit with our guest later, Mike Venuto, about what these funds are. What is a multi-factor? What is a quality fund? But for now, I'll just continue on with the highlight reel. Who are the victims this year in terms of inflows? We're always going to talk about the outflows. Low vol ETFs. They really, over at ETF Action, they pointed out that low vol ETFs have lost about $8 billion of assets this year. Now, that's something to keep an eye on as well. It could be a sentiment thing in the market, but one thing is the low vol ETFs, since they launched a little over 10 years ago, I think SPLV was the one that came to market a little over 10 years ago, and many more behind it. But one thing to keep in mind is they've had plenty of days in the spotlight. So, 6 months of outflows, we'll keep an eye on it and we'll see where that goes. But these funds are not going away. So more to come on that, I suppose. As for performance, we're talking about asset flows, and that doesn't really tell you how things are doing. But as for performance in 2023, I'm looking at the top list of 3,000 plus ETFs that are tracked, and the list is dominated by Bitcoin or digital asset or digital miner ETFs. Anything in the crypto space really, and they do include the futures-based strategies, but most of them are actually equity-based strategies investing in companies that are in that sector. Some of these ETFs in that Bitcoin, crypto, digital sector are up over 200% this year. They absolutely dominate the list of top performers, and so we'll be talking a little bit more about that as well today. I wanted to sort of strip that away though, because it was so noisy with the crypto digital space, and I wanted to find a non-crypto digital type ETF that's doing really well this year, and I found one, PP. That's the Meet Kevin ETF. It's up over 50% this year. It just launched late in 2022. They've had great growth in assets. Their shares outstanding has been ratcheting up, and they're a very young ETF, but they're showing great signs of success and performance. And we'll get a chance also to talk with Mike about that fund in this episode. The losers table on the performance scorecard is basically cannabis funds and regional bank ETFs. Those areas are down in the neighborhood of 25% this year. We know what happened with regional banks. That was all over the headlines this year. Cannabis has just been having a rough go, and so with that, we'll move on to the guts of our episode here. I'm excited to bring in our guest, Mike Venuto, who's the co-founder and CIO of Tidal Financial Group. Mike, he's a friend of mine. I've known him for a long time. We've been fishing together. We've done business together. So with that, Mike, I just mentioned PP, okay? That's what the amazing fund. Tell me about this. First of all, who is Kevin and how did you meet him?
Yeah, so
operative word, meet.
Yes. So, Tidal Financial, we're a platform that has helped over 80 ETFs and $7 billion of assets come to this market. We trade with Mirae and Chris. We've known him for a very long time. Meet Kevin is somebody who found us and wanted to launch an ETF. Now, he's got an amazing story. He's a young man who's built himself up to, I think it's 11 million YouTube subscribers or YouTube downloads.
11 million?
Yeah, like it's a crazy number. Like, let's hope we get this podcast to 11,000, right? So he built that up, and he's like a self-made man, right? He did real estate. He built up his own equity portfolio, and maybe like a year and a half, 2 years ago, he did an episode where he showed his own portfolio, and he had this idea: why don't I just put this in an ETF and let other people invest alongside me, and I'll never have to pay taxes again? Right? So it dawned on him that as an influencer, people wanted to invest alongside
What's
him.
his strategy? What does he do different than everyone else? Is he buying stocks? Is he buying real estate?
He's buying stocks. He's a concentrated portfolio. His top position is Tesla. His thesis is purchasing power, right? So that's what PP stands for. Even though he does a lot of jokes around the PP, it really means purchasing power.
No kidding.
So the best thing that I saw him do recently was he went to Elon Musk's Tesla's shareholder meeting, got them to acknowledge him, stood up and said, "Hi Elon, I'm me Kevin. Tesla's the biggest position in my PP, my ETF." You hear Elon laugh. And then he goes on to tell them how he thinks they should do advertising more and all that stuff. And Elon actually acknowledged it and went on CNBC and actually talked about how, it's nice to hear from shareholders. So not only is he building a portfolio of the companies that he believes have true purchasing power, pricing power, but he's also acting as an active shareholder and speaking, doing the things on behalf of his constituents that they want him to do.
Now, does he have a lot of turnover? Does he move things around a lot?
He does. He is an active manager, but I wouldn't say there's huge turnover. It's more managing position size, taking some gains when there's something as a winner. It's a thoughtful strategy.
And he has the ability to go where the puck is going. He doesn't
Yes.
have to wait for an index to tell him to do it.
Nope.
He can be ahead of the curve in many cases if
Yeah.
he's right.
Yeah.
So it sounds pretty cool. I'd like to meet him one day.
I'm sure we will.
Thank you for that, by the way, because we're familiar with the fund, but I wasn't that familiar with the fund, so that'll be.
I think
be
you've
fun
done
to
a
keep
create
track.
or two for him.
A little bit,
yeah.
Here and there. It's funny. We do so much creation and redemption, and a lot of times we lose sight of the whole thesis behind what we're creating and redeeming because it's supply and
people's
demand
lives,
driven.
right?
Yeah.
I mean, that's one of the things I love about our business is people come to us with ideas and we can help them figure out how to formulate it and make it into the best investment vehicle in the world, which is that ETF structure, right?
It's an incredibly efficient vehicle, and look, tax efficiency. You alluded to it. Kevin recognized that obviously and said, well, if I have this in this vehicle, there's tax efficiency. I'm going to stay invested, and just so everybody knows, when we talk about tax efficiency, no one is saying tax avoidance. That is not a thing. If you have a gain, you have a gain. What tax efficiency of ETFs really is allowing the fund to operate efficiently without triggering the gains. In other words, the in-kind receipt and delivery of securities helps managers avoid triggering a gain. They still have a gain, and they will realize a gain at some point or another. But
yeah, so a lot of people like to call this a loophole. It's not at all a loophole. It's actually the better thing for investors because it's rewarding good behavior, right? So if you buy an ETF and hold it, well, 94% of ETFs have never distributed a cap gain. That means you don't pay taxes on that ETF until you sell the ETF.
Right.
Whereas with the old structures, the mutual funds, you could be getting distributed gains and have a loss. Makes no sense. So it's not a loophole, it's a reward for the good behavior of long-term investing.
And just also, it's not unique to ETFs. It's unique to the 40X structure.
Yes.
And that's important for people to realize. It's not ETFs can do this and no one else can. It's not true, but it's easier to do, I suppose, in the ETF.
Well, you got to get a market maker who's willing to accept the overnight risk.
Correct.
A mutual fund only prices once a day. How often do you want to take overnight risk on a mutual fund? Yeah, we're not going to get you to commit to that one.
Recently, I was poking around at some of the stuff you've been chatting about online. You've obviously got your own big following. You were talking about the Magnificent Seven, which I had I don't always know these things off the top of my head, but it's kind of a cool little catchphrase. So that's the FANG stocks plus Tesla plus Nvidia.
Yep.
What's your observation there? Because if I think I saw what you said, it's pretty alarming.
I mean, look, that's the entire return of the market, right? So like if you look at value stocks year to date, they're up about 1%. You look at that basket of those 7 stocks, they're up north of 60%, right? So that's why there's such a top heavy market this year. If there wasn't the AI buzz, we would probably have a down market this year, right? Like what's keeping up these stocks is the belief of AI changing the world. You know what? It is going to change the world. We're behind, on our platform, we have Roundhill's new chat ETF. We have many people talking to us about all kinds of AI strategies. I'm just not totally convinced that the valuation is justified today. It is definitely justified for 3 or 4 years from now. I don't know that where it goes in the short run. A lot of times it's going to go up another 100, 200% before people start to.
That's a lot of
sober.
concentration in a small number of names, and,
Yeah.
and it worries me. It worries me for two reasons. One is there's this herd pack mentality of everybody's chasing the same. Everyone's chasing the same thing, and people aren't being creative and saying, well. Everyone's buying these things, right or wrong. If everyone's buying them, they're driving the price up. There's this herd mentality push that I'm not going to say artificially inflates these prices, but it certainly creates quite a bit of tailwind, for these securities, to outperform everything else. But it makes me wonder how much opportunity is there in the other 993 stocks out of the top 1,000 that are not getting the love. That's probably where the next heroes are, I would imagine. But picking those is not my forte. That's more your forte. But
look, if you given the recap of the first 6 months coming into January, I would have said value instead of growth. Wrong. Right? It's been all growth, and it's been all an AI story. The growth indexes are up 30, and the value indexes are up 1. You do have this phenomenon that I know we wanted to talk about with the single stocks, right? Talk about real concentration, right? We've gone from one of the ideas of an ETF is diversification.
Yeah.
Now we have single stock securities, and you mentioned those 7. You have the FANG Plus group that Rex has in the ETNs. You just saw Roundhill do big banks, like the top 5 big banks or the top 5 big oil companies. So you're seeing this move from diversification to concentration. I'm sure we'll see the top 5,
Well, how many times have you been out, backyard fire pit or at a dinner party, and you're having a conversation with someone who's not in our business? You get excited. You're talking about something like this. What do they say almost every single time? Is there an ETF for that?
Yeah.
And I was going to ask you that. You already kind of answered it, but but that's what people will say is, well, okay, is there an ETF for these 7? Can I buy it? And then, more importantly, is there an inverse?
Yeah.
How do I take the other side of that?
And then is there a leveraged one?
Right. And so you talked about single stock ETFs. Tell me about one that you recently brought to market. TSLY, I think is the ticker.
Yeah. So
what's the story behind that? Because if I understand it correctly, I had always thought that the single stock leverage and single stock inverse ETFs could only be achieved by using swaps. Mm-hmm. But you figured out a different way to do it.
Yeah. So the single stock idea of an ETF has been around since 2008. I think Greg King at Rex originally tried to do it in volatility shares. Then it went over to Europe. Jose went and did it in Europe, and so did Will Rind. And now it's here. And when it got here, everybody ran and filed for leveraged and inverse. Now, what allows you to do it here is a new rule. Now, I don't want to put your people to sleep and whatever, but the rule is called 18F4. It's the derivatives rule. That rule democratized the ability to do leverage to everybody instead of just direction and pro shares, but it also limited leverage. So what you saw was a lot of people filed for 1.5 times Tesla or 1.25 times Tesla or 1.25 times NVIDIA. And those didn't really garner the assets that people thought they were going to, because people, they like volatility. You like volatility. I like volatility, right? Like the investors want volatility. When we saw all that happening, we said, okay, is there a different way to approach this? What else do people want out of a single security other than just leverage or inverse? And we thought yield. So we worked with our friends at Zega, and we created the Yield Max suite. The breakout hit has been TSLY. It just crossed 200 million today, and that's in less than 6 months. But we also have a version of Apple, OARC, which I can't say what it writes call options on, but it writes them on an innovation ETF. We have NVIDIA. We've got Berkshire coming. 2 that I'm really excited about that we filed for are in the digital asset space. We have Misty, which will be micro strategies with a yield. By selling calls on micro strategies, the yield you can get is insane. The current yield on the Tesla one is almost 70%. We also...
Wait, yeah, what?
Yeah, because you're selling the volatility premium of Tesla. So the more volatile Tesla is, the more yield you're going to get.
Oh, I'm going to have to circle back on this one. And
go to the Yield Max website, you'll see it.
How complex are these option strategies, for these types of funds? Are they? Well, you mentioned Burke.
Yeah.
So I would imagine Burke is going to have a much different profile than Tesla. Obviously, that stock performs like a lot more I don't want to say it's a lot more
less
stable in a
volatile.
sense than something like Tesla. But
Yeah, Berk was actually the first idea because Berkshire doesn't have a dividend. So how do you give it a dividend? You sell a call against it. Now, all a call is you're selling the volatility, right? Berkshire has very low volatility, so we'll probably get maybe a 5 to 8% dividend on that. Whereas Tesla has insane volatility. Right now, it's throwing off a 70% annualized dividend. It won't always have that. It's just a matter of selling the volatility when it's there. Yes, they are complicated strategies. They are actively run by Jay over at Zega. He's an options guru, and he works on this all day. We use very short-dated options to get as much yield as possible.
now, does that fund have tax efficiency?
No.
Okay.
No. The tax efficiency is for buy and hold. When you're getting distributed income, you're going to pay taxes on it.
Gotcha.
Yeah.
All right, so it's important for
Yeah, no,
people to know,
definitely.
but there's no other way around it.
There's no other way around
So,
it. If you're
okay.
getting paid, you're getting to pay taxes.
Shifting topics slightly here, but not too much here. But I mentioned earlier about that league table that I was looking at from ETF Action and the crypto digital mining ETFs just blowing it out of the water. I remember two funds coming to market a few years ago to do the blockchain. BLOK was one of them, and it was a race. I remember it very, very specifically because I would have a relationship with both managers that were bringing it to market, and it was it was watching two people sprint like their life depended on it to get to the finish line. It wound up being a tie, everybody. They both got to market on the same day or the same week, and everybody, the rising tide lifted all ships. But BLOK was one of them, and that came to market from Amplify and had amazing success right out of the gate. I remember it too because the people I was working for at the bank, we don't trade Bitcoin, we don't trade blockchain. I'm like, you can't trade blockchain, number one, and we're not trading Bitcoin, we're trading equities. There are equities in this ETF. Don't worry about anything else. This is like any other regular equity-based ETF, but there's a strategy and there's a science behind it. Tell us about it.
Yeah, so Block is one of my favorites, and it actually comes out of an idea that we had in the past, which was an ETF of all the ETF companies, right? We loved this idea. It was called TETF. It never got assets, but it owned BlackRock and Wisdom Tree and State Street and all the various things.
Yeah.
And I was at an interview at MarketWatch in 2017, and they asked me what could stop the growth of ETF industry. I said, the only thing that could replace it is blockchain. And they laughed at me. And then I went and started doing the math. And hell, the ETF industry at that time had like $6 billion a year in annual revenue. And blockchain was already at like $30 billion. I was like, okay, there's something here. I need to hedge ourselves by embracing this. And Dan Weisskopf and I went and did all the research on the blockchain companies. And we built a strategy, actively managed, that tries to seek out all the best ideas in the blockchain area. We're the only ones that have spot Bitcoin exposure in there. We own the Canadian Bitcoin ones. We do all kinds of things in the cap structure. We've done IPOs, we've done SPACs, we've done private. So Block is an extremely active approach. We're up over 50% on the year. It's one of my favorite funds that I've ever launched, and it's definitely one of my babies now.
Well, this whole space is, we are, and now for people that aren't like Mike and I, we get bombarded with headlines and news releases, and there was recently, there's been a lot of buzz around a spot Bitcoin ETF. Is it going to get approved? Is it not going to get approved? People are filing for it. They're pulling their filings. They're refiling. There's a lawsuit. There's so much going on, but I can assure you that in the last 4 to 6 weeks, there were some headlines that came out, major asset manager filing for spot Bitcoin ETF and others right behind it. And let me just tell you, the street is buzzing right now. No one really knows if approval is going to be granted, but I can assure you that the regulators, the custodial banks, the coin platforms, the issuers and managers are all bracing and trying to prepare for what if there is an approval later this year. Because if there is one, there are complexities and nuances to non-exchange based products, right? And so it won't be easy, believe me, but this is really exciting. I gotta think that a lot of the recent performance in these stocks is maybe preemptive of, if this gets going, this space is just gonna blow up.
Yeah, look, Bitcoin's up 81% as of the end of June. So that last 30% is all the buzz around BlackRock's filing. I'm getting, like, we're a platform that helps people launch and grow ETFs. I'm getting a call every 10 minutes about this right now. And I'm on the phone with every regulator at every exchange and every lawyer. And you see the Twitter sphere, you hear all the stuff, and you would think a lot has changed. The only thing that's changed is BlackRock jumped in. The SEC hasn't moved at all. The regulators, the tone hasn't moved at all. And I don't think Mirae could clear this stuff right now. I don't think most of the street could clear this
It would
stuff.
be cash. I think right now it would be cash. And then look, it would require people to have a wallet somewhere. It would require APs or market makers or both to have a wallet somewhere. Again,
How would you hedge yourself?
It's
though?
new business.
Yeah.
Again, these are questions that are being asked, and I'm sure they're being solved for, because look, if there's demand. What's interesting though is that, like gold or like short duration treasuries or you know what I mean? Like, there are certain types of products where, how many gold ETFs do you need? How many US dollar ETFs do you need? There's how many Bitcoin or spot Bitcoin ETFs will we need? I think if there's an approval, you're going to see how fast the herd is thinned out.
Yeah.
And the winners will be those with great distribution power. That's it. It's going to come down, like everything. It comes down to distribution, but in something like that, where it's going to be hard for someone to differentiate management outside of fees, it's going to come down to distribution.
Yeah. Right now, everybody wants to be in the race, because we saw when the first futures one launched 3 days before the other one. One's got $1 billion, one's under 50 million. So 3 days matters in this race, and that's why everybody's running. And there's a million crazy rules that were written 90 years ago that are governing this process. 90-year-old laws are deciding on when you're going to get a spot Bitcoin ETF. Chew on that.
Yeah, well, there's a lot of old rules that we had a lot of regulatory advances for the ETF industry. 6C11 was our biggest one. Again, it's probably too much inside baseball for most listeners, but basically what it means for us is the regulators that watch over our businesses and your best interests, our best interests as well, have advanced efficiency in bringing products to market, reducing some of the legal costs and some of the hurdles, making it easier for individuals who have great ideas. Exactly, making it easier for people like Meet Kevin to bring a product to market so that they can compete. It's a north of $7 trillion asset base here in the U.S. alone, with more than 3,200 ETFs. I think we're currently looking at. We expect that number of ETFs to double in the next few years. We expect assets to possibly triple, in that time. So there's no bad ideas. It's been a long time since I've actually said that's a dumb idea, right? Because people are way smarter than me. They're gonna come up with an idea. They're gonna have passion and conviction. They're gonna bring it. They're gonna get someone like you to help them get that product to market. And then again, it comes down to distribution, making sure people know about it, they can learn about it, they can read about it, and that's it. Well, Mike, I can't thank you enough for being here. I'm just gonna wrap up a couple of things here, and we'd love to have you back, and look forward to doing more business. I want to see this next roster of ETFs coming down the pipe.
Sounds good.
All right, great, Mike. Thank you.
Thank you.
In closing, look, I hope everyone's having a wonderful summer. We're in July now. We're real excited for the second half of the year. As I mentioned, the hottest day on record on planet Earth was recorded recently. That's pretty exciting, I think. I don't know. I like hot over cold personally, but I blame the big bonfires in Canada personally. I think that's probably why, the hottest day on record was, I'm kidding, of course. The Yankees and the Red Sox. Okay, I don't know how many people are into baseball out there, but would you believe if I told you the American League East, which historically, at least in my lifetime, that is the division to watch in baseball, right? The Yankees and the Red Sox are at the bottom of the AL East. I don't think in my lifetime that's ever happened. So if there's a baseball statistician out there, and prove me wrong, and let me know when was the last time that those two teams were at the bottom of the AL East all by themselves. Anyway, that's the kind of stuff we're thinking about. We think a lot about work and a little bit about baseball and summer fun. So we'll be looking forward to coming back to you shortly with some more guests and more exciting ETF topics. I'm Chris Hempstead. Thanks for listening. Bye.